All right, for more on Tesla's results, let's bring in our panel tonight. Tasha Keeney is Director of Investment Analysis and Institutional Strategies at ARK Invest. And Gene Munster is back. He is, of course, the Managing Partner at Deepwater Asset Management. Tasha, I'll start off with you. Do you think that we've seen the lows for gross margin ex credits from Tesla?
Yeah, I think as Tesla said, I would expect credits to be, I mean, they already are a smaller picture than what they once were, and that's going to dwindle over time. We've modeled Tesla's future gross margins based on Wright's law. We know that they are decreasing cost per vehicle, which is very important. Of course, I actually think the Cybertruck is going to help with that. And we know that, the first vehicle was produced. So, or is coming out. So I think longer term, we actually think gross margins could be about 50% if you look at the 5-year forecast. So that's not just driven by electric vehicles, by the way. It's driven by AI, which you all touched on. So, we think Tesla's going to be a leader in autonomy. We think they could take a very attractive take rate off of gross revenues, off of an autonomous ride-hail service. And that's really going to be the story today. I think not enough people are talking about Tesla is, it's one of the most important AI stocks to be talking about at this very moment.
So the gross margins of 50% in 5 years, is that built on this notion that it is an AI company and that you need to have that robo-taxi part of the business in order to achieve that? If you took that out, I mean, is that basically going to not inflate, but make those margins look a lot better because the auto margin is in fact going to continue to be low?
No, I think auto margins will also improve as, again, vehicle costs decline. We've modeled, Wright's law says that for every cumulative doubling in production, you get a corresponding reduction in price. If you look back over the past 100 years, this models what the auto industry has done extremely well. We think it'll be the same thing with electric vehicles with Tesla. Yes, I do think that autonomy longer term is going to be driving Tesla's margins. I think it's the most important thing that they are focused on and that they should be focused on. And hey, they're in a great position. I mean, if you look at what they reported, miles in full self-driving are over 300 million cumulative to date. Compare that with competitors like Tesla and Waymo that have autonomous projects. That's in the low millions. And Tesla's averaging over 2 million miles per day at this point in full self-driving. Even more when you look at the total fleet, what's not in full self-driving. So they have a data advantage that is unparalleled in this industry. And I think it would be extremely hard for anyone to catch up with them at this point.
Right. And Gene, I think that you're the same belief in terms of Tesla, the long-term story. But right now, we're very concerned, given where the stock is, about the short-term story. Do you think that we will get indications tonight on this conference call that we are seeing the trough in margins at this point? And if we don't, what happens to the stock?
I think the CFO is going to outline the trajectory of margins going higher. I think that it's going to be this year. It might be in 2024, but I think he's going to talk about that kind of vector going higher, and I think that is going to be enough. If I'm wrong, and they say expect margins to be flattish for the next year, the stock is going to go down in the near term. So I think right now we have essentially a third of the results. I mean, this is all good, but as you said, Melissa, at the top of this topic, is that this is all about the conference call and the commentary about margins. Most investors don't have the patience to wait around for 2-3 years. They want to know what's going to happen near term. I would add another important topic that wasn't covered with the panel related to this in terms of what's the stock going to do and what could get it moving. Cybertruck's a big deal. The Ford F-150 is a huge deal. That is, they sell about 600,000 of those a year. Ford is acknowledging that they are worried about this vehicle. Investors, when they get on the road, this is like nectar for growth investors, is to see a new type of technology that is getting out into the world. So I think you're going to see that. And I want to just preface that with a piece. I think the Cybertruck's going to be late. I think that what they said in their shareholder deck, they said expect it in the back half of the year. Previously, they had said the third quarter. Technically, the third quarter is the back half, but based on that tweak to the language, I say it comes out in the end of the year. But another month here, another month there, doesn't matter. They announced it in November of 2019. Investors have been waiting a long time, and I think the stock goes up when the Cybertruck comes out.